All right, so it's currently January 1st of 2026, first day of the new year. Happy New Year's. Uh, we just got ourselves a perfect, damn near perfect evaluation of what an ICC trade really is. And this is I've been 2 weeks into adopting this method of trading, and it has legitimized trading for me on an observational level. Like, I can actually see structure, I can actually see trends, and it feels fucking amazing. Like, I love the fact that I can see this stuff now because, reality is not everything's guaranteed. So the method's not always going to work as good as it gets, but it works more times than not. And that's what excites me about this, is that I can see it. With ICC, you can see market structure because you're able to, your job is to identify market structure and your job is to identify trends. And then your job to make money is to target highs and lows. It is so simple. And now I'm questioning, like, how do 99% of traders fuck this up, including me, right? So this entire journey of, recording these videos and making these evaluations is to progress and to go back on my errors as a trader. And I also made an error on this trade, but at the same time, I did everything correctly besides waiting for TPs, because as you can see right now in real time, if you haven't spotted this yet, then you're just like me not too long ago, because this is a perfect ICT trade right here. I mean, ICC trade. So check this out. I'm gonna go ahead and remove all of these drawings real quick. So ICC, indication, correction, continuation, right? You want indications first to spot breakouts, potential breakouts. Then you want fake outs, which are the corrections. It doesn't matter how much, as long as it remains within structure, within a reasonable range, then there's still a chance for continuation, which is continuing the trend, right, of the breakout. So, and these are swing trades, by the way. So this time frame goes away, like this happens. You see a bunch of movement here. Okay, so we marked the swing low. So I'm like, all right, cool. Swing low is going to be around here because this is the current low, right? So we're on the 1 hour because higher time frames have more conviction than lower time frames. Lower time frames are a lot more volatile, so keep that in mind. So we have the low here, and at first when I was doing this, my biggest mistake was I marked this I marked this as the high, and I considered this an indication. That's wrong. You, or me, the trader, want to make sure that the chart matures and it gives itself a story, right? And if you can give it a story, then you have more to work with, you have more information, and the target goal is still the same. We still want to get up here. We just need to figure out what the story is telling us, aka market structure, right? So I made a trade here, it was bad, and then I went out of it. I had a stop loss that was like right around here and it hit, right? So that happens, market continues to mature, then we find our swing high. So I'm like, cool, I marked the swing high. And then this shit happens. And I'm just watching this over the week. I'm like, okay, buyers are here. The buyers clearly are rejecting sell side. I'm sorry, let me phrase that correctly. Buyers are currently rejecting price from moving further down from this point. So this gap right here is a clear indication that buyers are wanting to hold this up. Now we just need to know what sellers want to do, right? And we get up here on the 1 hour, and sellers, the price starts to move towards the sell zone, and sellers can't really hold on tight. There's a higher low forming. So this would be the indication, because this is a possibility that we are beginning to break out. And the reason why this is an indication and not anything else is because, and I'm only using candles, not wicks, which is my biggest mistake for fucking a whole decade. But biggest thing to focus on are the candles, because that's where most of the action is really happening. The candles tell the stories. The wicks will give you a side story of what's happening on the inside, basically the lower time frame. But we're focusing on the 1 hour time frame. So stay with me on this. Indication happens and we get a pullback. That's the correction phase. So I mark this as correction and I'm like, okay, cool. Correction, anything could happen. I just need to be above this, the buy side, and we're good. Because buyers are clearly holding out strong. We had all this movement. Check this out. We have an imbalance here and it has yet to be filled because we're still continuing this strength, right? And then you see more imbalance, right? So you're like, okay, price can move, and I'm using a form of fair value gaps here as a way to support my identifications when it comes to identifying structure. So imbalance here, but check this out. We get to here and buyers are holding out strong. So I'm like, okay, let me dig in and figure out what's going on, because this could be the perfect place for entry, because the correction as wherever it goes, as long as it comes back and retests indication levels, we have a chance at entering the market. And I'm going to confess, I entered I think around here because I woke up late as fuck, by the way. I woke up 5 hours after the move happened. So, but this is hindsight. Indication happens. Okay, cool. Correction happens. Okay, cool. Correction can develop wherever it decides to develop up here. And it retests the highs here and it breaks out, right? I go, cool. I look back at this. I'm like, cool. We broke out of the indication phase. Market swings back and it's confirming now if this is the new low. If this resistance is now a support level. And when you're here on this right side, you're like, okay, this could either drop super low and we will have a lot of uncertainty as to where it goes. Now, Sai mentions that for your entry, you should always keep it within the indication level. So the indication range here where it begins to create that sort of new high. All right, I bought it up here with a premium, but I bought this with the thought, or not with the thought, with the knowledge that my long position was going to be a 1 to 3 SLTP, right? So it was good, and the SL was right under the breakout. So I was like, perfect. This is fundamental 101. I just bought premium, right? And so looking here, if you were to set up an entry position, you're getting a confirmation on the 15-minute chart that, hey, we closed this out and we were here. Now we need to form a higher low compared to this side right here, right? Anything above this would be a higher low. And because this candle finalized in this sort of manner where it's above the low, this gave traders the signal that, hey, we just bottom out here. This is a low swing on the low time frame. Let's start buying out. And that's exactly what happened. We started filling and displacing past this candle. We absolutely displaced this candle. Buying here would have been the calculated risk that you were applying ICC for. You'd be entering here, right? After identifying indication, after identifying the correction phase, and we displaced the indication phase. Sure, it swung back, but these three candles, this big one, 2, 3, that confirmed to us as soon as this one closed that this was going to be a swing low, but it was a higher low compared to over here. As you can see, this is the swing low, this is the swing low, it's a higher low, and it's during the continuation phase. As you can see, we started displacing out of here. So this would have been the best time to make, around here in this zone would have been the best time to form an entry. And had you form an entry there, you would then put your SL under the correction. So let's go out here. I use the wicks personally as my telltale when it comes to my long positions or short positions. So let's assume entries here, and we're targeting recent highs. So up here, this wick, and our correction is here. So we would be looking at a 1 to 14. No, really, it's right here. I'm not gonna lie. This was actually correct. Because remember, 1 hour has more conviction than the 15-minute or 5-minute. you can make the decision to buy here, right? And then set a stop loss here. But for higher conviction, because you're focusing on the 1 hour, right? The wick for the 1 hour is here at the correction phase, the lowest phase. And that's where you can put the wick. Oh, I'm sorry, that's where you can put the stop loss, which is right under it, right? Because in theory, if the ICC method is true, and of course, not all price movements guaranteed, not all methods are guaranteed, but for the most part, if it's still a bullish uptrend, then it should not be going down here, because then it would be forming a lower low, which would then bring us back into structure, and we would have to make this this would be the high swing on the structure that is continuing to form, which means we would never break out. We would still be having a story to tell. But because it broke out and because we were able to confirm a breakout, now we're just targeting highs. And as you can see, if you know ICT, then you know that price likes to target gaps and close gaps. So ideally, for a conservative trade right here at this level would have been a healthy cut, right? You would still be in the trade 1 to 5 on your entry to your TP, right? If you are targeting the absolute high, which is the wick, you're going for 1 to 8, which is what I was doing. But then I cut my profit here. I cut profits here. Let me see. So we were making a breakout here, and then there was I checked the 5 minute, and there was a higher low here, and there was, I think on this higher low, after we broke out and just formed that higher low, that's where I set my stop loss, right? Or no, it was right here. Sorry, yeah, it was right here. So I set it right here. Realistically, and like for future's sake, because I'm so new to this still, what I'm going to stay true to is just taking conservative chops, which is like 1 hour time frame breakouts. So like right here would have been a breakout. As you can see, the wick is right here. So boom, breakout, stop loss should be here. Boom, boom, stop loss should be here. And so definitely for future's sake, like now I have something to work with, but seeing this in real time, like actually apply. I mean, we haven't hit we haven't hit the swing high, but we've closed this gap, and we've also closed out on the candle from the recent high. So in theory, like, dude, the ICC method is the fucking way. Like, the biggest eye opener for me was the market only does 2 things in terms of like movement. It creates stories and it tells a tale. So like market structure is the story, and the trends, whether it's an uptrend or downtrend, is the tail. It's the tail you want to follow. It's the wave that you want to ride, essentially. So swing, and this is as a swing trader. So like here's a story here that's being played out. You see how there's like a bunch of movement here? Here's a story that's being played out. Here's a story that's being played out here. Like you see, it's like a whole new fucking language when you like think about this shit. And like I did my first ever ICC trade here, right around here. And look at this fucking story that was being told. Like you had the swing low here, you had the swing high like here, right? And then you have the indication, correction, continuation. And it's like, boom, it comes back and then it fucking hits the high. And I'm like, okay, first time seeing this, I didn't make any trade on it because I like made 3 trades here and there, and it really fucked me over, right? Because I'm still an amateur to this, right? And then it makes the high and it absolutely bursts out and breaks it. It actually targets the high prior. And then market comes back after New York Open. Then we have some more storytelling going on, because on the higher time frame, buyers are holding this line. Like on the 4 hour, buyers don't want to give up this zone right here. In fact, we're making higher lows as we speak about this, while we're also being rejected on the sell side here on this zone, right around here specifically as of recently, right? But we hit it. We fucking hit the mark. So here I'm thinking like, bro, this shit works. If you do it right, in theory, this shit works, right? But if you do it right, you can actually capitalize off of it. And doing it twice so far, not perfectly, but doing it twice so far, I'm starting to see it better. And this is why I'm making this video, is that one, for documentation, for my sake, so I can look back and review, but two, so that people and me can understand that, hey, this shit actually works. Like, this is not bullshit. ICC method actually works in real time for markets like Bitcoin. Like, this is a proven method for Bitcoin, for example. I don't touch stocks when it comes to trading anymore. I don't touch gold yet or silver yet. I've yet to touch those. I just want to get this right with Bitcoin. I know that if a method works without any studies like SMA, EMA, all that crap, RSI, MACD, because I used to do that crap. All right. If it works without any of that, then in theory, it should work with all the biggest institutions. Oh, I'm sorry, all the biggest markets that involve institutional backing. So Bitcoin involves a lot of institutional backing as of recently. So Ethereum follows through with that because they're two of the biggest pairs in crypto. S&P and NQ follow through with that because they're the biggest markets that hold a lot of institutional involvement. Gold and silver, I mean, come on now, right? Versus, yeah, you have some in like Tesla and Nvidia. Yeah, there are some of the biggest assets in the world, but I'm not focusing on those. They probably do work on these for all I fucking know, but I don't touch those. All I want to focus on is Bitcoin, if it works with Bitcoin. And as volatile as crypto is, I mean, shit, it fucking works. Maybe I need to set my TPs lower and then start trailing once we get to a certain point. But shit, bro, indication, correction, and continuation all the way to swing highs. So this video is just proof that, one, the method is true. Two, you can apply it in real time. And three, it's really simple. It is so simple. I feel stupid talking about it, but it's so like story, proof, tail. I'm like, okay, swing low, swing high, and buyers hold strong, sellers not so much. We get the pullback. And by the way, like, if you consider the wicks, like, check this out. These wicks get liquidated by this movement up here by price, comes back down and eats buyers here, and if you don't use the wick here, comes up, I wouldn't say wipes out sellers, but comes up, indication happens, and it happens fast too. Like, this is too perfect, right? Typically it's not always going to look like that after looking through charts all the fucking time. Like, check this out. Right here. Okay. No. Okay. Continuation, yada yada yada. You could apply the same shit here. Check this out. So swing, because this is a high. In theory, this is still high. And then this would be the swing low, right? But this is also liquidity sweeps, because market sweeps the previous high and then sweeps the previous low, swoops all the money and then fucking delivers based off of that. But that's something that I'm still learning about, but I'm like noticing these things. But applying, like actually putting entries in and then like actually applying it as someone who hasn't gotten it perfectly yet, it's pretty like it doesn't hit you with confidence, even though like you know how it goes to a certain degree, right? And the more you know, the more confident you are in a trade. And now that I'm seeing the structure, and that I'm noticing trend, structure and trend, structure and trend, now that I'm noticing this, I'm like, dude, this is easy. Like, my eyes are seeing a whole new language forming in real time. And that's kind of the point of what I'm making with this video, is that I'm starting to see like, hey, like the price isn't just moving willy-nilly. Like, sure, it's volatile, but it's not willy-nilly. Like, look at this. And it's December, right? It's December, so there's a lot of consolidation happening on the higher time frame, but that's perfect. If you're swing trading, this is perfect. So I'm gonna cut it short there, but yeah, this is basically an observation. And I sold like probably right here on this dip. I set my TP, I sold at like around this range. It gets hit and then comes back up. Pretty sure there was a lot of stop losses here that got swept. That was me. But yeah, that feels good to know at least that like, hey, next time I should just hold out balls to the walls and have more conservative chop and like protect my losses, my potential losses in the future. Hope you guys can get something out of this video because I know it was 20 minutes, but I just want to make that observation, and I hope anyone who's watching this is learning from it. You know what I mean? But this is a journey. This is my second legitimate trade. Legitimate as in all the rules applied to a certain, like to the absolute peak, besides probably one rule, which is holding till highs, which is what I'll be applying the next time I see this. And then I'm also going to size up on that.